Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Tom O'Brien, CEO at TFNN. Thank you both for being here. So are you feeling like, I heard a lot of overbought, I heard a lot of frothy, when you look at price to earnings, price to sales, whatever you want to use, whatever metric, things are feeling a little overdone to you, Tom?
The market in general, this has been an extraordinary run. I'm looking, as we've talked to the last couple of times, for a smaller pullback. Nothing heavy, but my take is that we're actually in it right now. The Dow had actually started it, came back really good. NASDAQ yesterday, still sideways move. Nvidia, of course, was taking it south, meaning in the composite. I just think we're in for a break right now, meaning that we're going to get a pullback. And Nicole, where I'm coming from is this. I'm coming from the U.S. dollar and the bond market. And the reason I'm saying that is that the dollar right now is trading at that 105.686. The dollar looks to me like it wants the top of the range, which is 107. The market can't stand. As the dollar goes higher, this market most of the time is going lower. Not heavy, but going lower. The bonds, you can see what happened this morning, pre-market this morning, 6 o'clock, Wall Street time, the bonds are up. And as soon as Canada came out with their inflation, which is closer to 3, bang, it got smoked immediately. So that's telling me that it's going to be higher for longer and put more juice into the dollar. And the dollar is the thing that can wreck, markets, meaning because, bottom line, it's so strong. So I'm looking on this first trade on Nvidia. Yeah, on Nvidia, what's really intriguing about Nvidia is this. When they announced the split, it went up 40% in 5 weeks. Now, what happened also is this, is that I watched the ETF market really closely, because what happens with the ETF market, bottom line is if you get a pullback, the ETF's got to sell more. Well, many people went in Nvidia right at the wrong time. Last week, and the Granite shares, the 2 times leverage product, they put $783 million into that in 1 week. And just to give you an idea, that ETF, not this year it took in $8 billion. The year before, the whole year, it only took $168 million. So what happens there is that as Nvidia was getting sold down last couple of days, all those ETFs got to sell it. So, my take is that, if we look at Nvidia, you're at 124, you can sell it here. And I wouldn't give it any room. I get to stop at 125.79. Now, what I'm looking for that to fill that gap lower, which seems like a long way down, but on a percentage basis, it's really not. And that gap is down there at the $96 level. So, we'll see where this shakes out, but that's where I'm going with Nvidia. And there's only a 1.23%. There's only a 1.23% short position, which is pretty cool.
I will say, I heard a lot of over Nvidia over the weekend. I heard about the 50-day moving average. Ben's going to come on, that it was around $100. And I was saying to myself, oh my gosh, so many people were buying in at 120, 130, went to 140, and if this 100-day moving average is, that's 50 days at $100, you're the first person to put $96 as where you think it could be headed. Let's get to the charts. Ben.
Nicole, I'm going to push back on this one a little bit. I think that we could possibly still be in a trend up environment. This 123, 124 area is going to be key for both the bulls and the bears. Let me show you why. First and foremost, how we're trying to rebound today, and in a well-defined trend up, you don't spend a lot of time at lower extremes. In fact, that's by definition why they're called an extreme. Take a look at the sharp move higher here. Again, 115 all the way up to 124. And there's some conviction associated with this. No rejection at the very least. A 1-minute candle chart shows exactly what I like to look for. We're talking about the 2 phases of price development. Direct your attention over here to the left side of your screen. You're going to see even within this bigger move up we've seen today, sideways consolidation, within this bigger move up, look at how this pattern repeats itself. I'll go 1, 2, 3, maybe 4, maybe 5 times within that a bigger, again, high conviction move up on the left side of your screen, and then we go a bit sideways here. So that a big move, sideways consolidation acceptance, now transition back into a vertical phase. This stock is seeking value higher on a 1-minute candle chart. Now, I mentioned this is a big level, right? Let me show you exactly why, because we're now looking at a 30-minute candle chart, some of the selling that Tom was talking about and the weakness we've seen after coming off that high up around 141. We were establishing value at lower and lower levels. We were balancing around 124. We broke down again and established a bit of balance around 120. I kind of looked at this as one bigger area, and look where we're testing again right now, right to this key area, kind of a line in the sand for the bulls and the bears here in many ways. Let's step back one more time, and this is why I'm giving the benefit of the doubt to the bulls here, because it has been and continues to be in a longer-term trend to the upside. And what it looks like to me is that we're just forming a balance here, possibly going to go a bit more horizontal rather than that vertical phase that we had been in. Here's the area that Tom's talking about, that gap he mentioned. That's around that 100, 95, 100 level. That's the area he's looking for. But you're going to see I've got my eye on this well-defined trend up off the low from last year, around 20 to recently shy of 141. Looks to me like we're just transitioning from vertical to horizontal. That's very healthy. And when we were balancing around 90, keep in mind, that's exactly what the bulls wanted to see, a breakout and then value form at a higher level. Looks like they're getting it.
So is that what's happening? Well, let's see. Tom, do you want to give a rebuttal there?
Yeah, no, listen. It's in an uptrend. There's no doubt about that, okay? The real question is that will it do this type of retracement, meaning coming down to that gap? And we'll find out. You know, bottom line is that at this particular point, I think it's game. Like you probably, I guess, he was talking about Broadcom. Well, Broadcom is, you know, down good today. It's filling a gap. And when you look at the sector in general, you know, it's getting weaker. I mean, that's my take on it. So, you know, we'll see where it shakes out. Probability-wise, I really like the trade because you're risking $2 or $3, you know, to make, you know, basically 25. So that's not a bad risk-reward, you know, in general.
Let's get to Home Depot, which was exciting for a while, especially when it started to get closer to $400. And then it's sort of waving all over the place since that high. Some of your thoughts, Tom?
Now, this one, it gets real interesting. Normally, I don't short a stock that, you know, what happened is that this closed yesterday, you know, at the 148 level. Bottom line, it opened $10 down today. My take is that you could still sell it, even if it's down 14 bucks right now, and you give it hardly no room at all. You put a stop at like 340. And I'm looking for this to go into the 323 area. So what we have here, this is definitely a play again on rates being higher for longer. I think we're in a situation right now that people are going to be, well, people are running out of money, number one. Rates in general look to me like they're going to be staying at this level for a long time. And if we stay at this level for a long time, what I expect is going to happen is that at some point, the regional banks are going to get hit with this commercial real estate again, even though, you know, like analysts out there, including Blackstone, keep saying, oh, we're at the bottom. Well, they're saying we're at the bottom when they can't even pay basically their biggest fund. You know, they have to put restrictions on it. So my take is that we're not even close to the bottom on the commercial aspect of it. And, you know, Home Depot's a great company, but the bottom line is that if people don't have money, well, less homes are going to get done over. That's the first part. The second part is actually a little bit bigger. And what that is that when people don't see their prices going up in their homes versus either flat or down, they're not going to spend as much money. Because then we're going to start reading the articles again. Is it worth it to do a bathroom? Is it worth it to do a kitchen? You know. So my take is that this thing is going to basically get down to the lower end of its consolidation.
All right. Let's have Ben look at the charts quickly. I want to make sure we have plenty of time for our number 3 player here today.
Nicole, I understand the short-term bearishness here. I'm thinking long-term, though, bullishness. I am a Home Depot frequent flyer, and I can tell you that parking lot has been packed. So, yeah, the numbers were a little bit disappointing today, but aside from that, I'd imagine the numbers from this individual name are going to be pretty good when we get a look at them. Let's take a look, first and foremost, at some of that short-term selling we've seen and how it did take out a key area on the intermediate time frame, but it's a prime example of the transition from one phase to the next, like exactly we look for. horizontal into vertical. And are we about to start to get into a bit more of a rotational horizontal phase at this lower level? Sure looks like it, right? Could, again, form around, well, we'll call it, again, around this 338, 339, 340 area, testing lower extreme right now of a bit of a range that we've been in, possibly breaking out to continue this weakness here. But on the shorter to more intermediate time frame, you're going to see, again, how that move lower actually did take out a key area. The bulls did not want to see a breach of that 345 level. Even those that are, again, trading the short-term time frame, you got 5-minute candles. We're going back to a couple weeks ago. Stock was balancing around 328. We saw it rally up to 345. Similar situation, the staircase type pattern. Value was moving higher at 353. Again, the bulls want to see a breakout to the upside and value form at a higher level. Look what happens. In fact, we reverse. We start to tick out key areas that were established on the way up. So let's take one more step back, because we are, again, seeing some short-term weakness, but right to a key level that I'm watching here that I think could be crucial, 330. Nicole, we've been talking about this for a while, that kind of trampoline effect you get while you're in a very wide range balance. It becomes mature, a retest of the middle of that area. If we get some movement to the upside here, if today was just short-term weakness, ultimately short-term price decay, look out. I mean, we retest those 420 highs we're talking about from the fall of 2021, summer of 2021 into the fall of that year. And then, again, that next big hurdle's the highs from earlier this year, late last year. But there's a possibility that we could get a nice little move up here off this support area around 330 if, again, that longer-term trend is still intact.
All right, thank you for that. And we'll get over to our next name, and that is Toll Brothers. 1 year up about 52%. They did have a look from the Department of Justice, I think it was, and it did have a nice feature on the CEO and Barron's. Some thoughts on Toll Brothers, Tom?
Brothers, we're down 285. You know, we're at 115. Now, this one I'm not looking to move a lot. I'm looking to move it. You know, we were at a high of 118 this morning. Bottom line, you could sell it here. Now, I'm only looking for 111 on this, okay? It's the same type of concept, though, that higher for longer rates. I see the action, meaning that when rates continue to be this high, what happens with the large builders is no doubt they can get incentives, they can do buy downs, they can do all of the above. That being said, what is happening across the country is that, you know, you keep hearing that the real estate market is frozen. Well, when it's frozen, the bottom line, it means it's too high. So if this is the stock market, of course, you know, they price it down. And the real estate market, that hasn't happened yet. Well, it's happened slightly, okay? But my take here is that it's going to go after the lowest swing point, and we'll see how that shakes out at that lowest swing point, meaning at the 111.27 mark, you know, because this has been a consolidation. You know, and it's been a small consolidation between the 111 and 130. But my take is that we're going to get down into that level because the nervousness is going to get bigger and bigger as we go forward if this 10-year is still staying at this 4.4, 4.5 area. Because then the mortgages, you know, are basically 7%. And 7% is a big number on big numbers.
Yeah, absolutely. And everybody's watching those mortgage rates very closely. Ben, you get the final word here.
No, almost an identical example, I'd say, and argue, Nicole, as Nvidia. So we're going to kind of end where we started off in many ways. Short-term weakness, long-term strength. So unfortunately, I kind of feel like it's an 0 for 3 today as far as Tom and I. But let's begin with, or Tom and me, but let's begin with Toll Brothers here and that short-term weakness. And some of the selling we've seen, you can see, again, from 120 or just shy of all the way down to this morning around 115. In fact, we just made that low as Tom was laying out the fundamentals here and talking about this example, which, yeah, it has struggled as we've seen this higher rate environment kind of take its toll. Again, short-term weakness you can easily identify here as values moving lower, and we actually looks like, as we speak, in a breakout phase. So you can see the red candles. You can see that we're seeking value lower as we transition from a kind of low conviction phase into that high conviction. Again, we're back into that vertical phase here. So let's just move away from that 1 minute chart into an hourly candle, because here's where, again, it starts to look to me like this could be a long-term buyer's opportunity to kind of step back in. And if we do find some support around this 114, 115 level, get back through 120, opens up a door for 135. You can see we've been trending higher here, bottom left, top right. This chart we've added quite a bit of time on from that 1 minute candle all the way back to December of last year. But again, just looking at where we see value, which way it's moving. And yeah, even within this range, kind of like what Tom was talking about with Nvidia, you could kind of work your way towards that lower area. It could be that gap that he pointed out, 95, 96, but still establish a range, which is what the bulls are looking for. Right now, they don't like to see the price decay, but if you get into a horizontal pattern, if you establish value at a higher level, that's all they want, right? Higher and higher levels here. Lastly, taking a look here, one more chart for you, you can see that we're in a well-defined trend up. Similarly as Nvidia, right? But in this instance, off the pandemic low around 13 to briefly above 135 back in May, currently balanced, forming and values being established around 120, testing a lower extreme of. Again, Nicole, short-term weakness sets up for those longer-term buy opportunities.
All right. Thank you both for the big three today. Nvidia, Home Depot, Toll Brothers sell short on all of those, Tom O'Brien says. Thank you. Tom O'Brien, CEO of TFNN, and Ben Lichtenstein on the charts there.